How you doing? Rob Piton here, partner with Preactive Investments. And I want to go through a company using the framework that we just finished up explaining. If you watch our 13 videos that we posted on our YouTube channel for Preactive Investments, outlining how to win at the money game. And the company we're going to discuss today is Apple. It's the most valuable company in the world, worth just under $900 billion. As of Friday, it was worth $898.5 billion. And we wanted to go through this framework and explain, why are they worth so much? Like, how do they hit on these core principles that drive economic value? Well, for starters, starting from the top, love. There's a tremendous amount of consumers out there and businesses that love Apple. Why? Because of its simplicity, because of the fact that their products are very elegant. They're almost like works of art. They don't have a lot of bugs. They don't have a lot of problems associated with other types of software and programs, as well as hardware. And as a result, this has allowed the company to grow into being almost $250 billion in revenue. It does $230 billion in revenue as of last year. And it makes almost $1 billion a week. To give you an idea of how much money that is, there's 168 hours in a week. Apple is making over $5 million an hour in profits, not in sales, but in profits. It's unlike anything else this world has ever seen. And a lot of it stems from the love of what they're doing for the customer. 2, wisdom. Apple had the wisdom of Steve Jobs, Steve Wozniak, to start the firm in 1977. They brought this idea of thinking differently. They started it in the 80s, and they've actually executed it after Steve Jobs came back in 1997, before he passed away in 2011. They tried to stay ahead of the curve and think about where the world was going instead of sitting back and waiting to see what happened and then reacting. And that comes from wisdom and but by actually living out the knowledge that they had learned from their past experiences. They had the wisdom to make better decisions, which led to success for their investors. 3, government. Right now, the government is something that we need to think about if you're looking at Apple, because they could go after Apple. Why? Because it is a bit of a monopolistic type of situation. They have so much power in the marketplace that they control a platform where they dictate what various suppliers can charge on their platform, and they capture more of the money by making people pay them what they think is fair. And because they're such a large component and they're so ingrained in people's habits, this is the classical definition of a monopolist. So it's something that we have laws on the books. We don't necessarily have a government situation right now that is anti-business. We don't have an anti-business climate. So there's a good probability and possibility that nothing happens. But you need to be aware of the risks, that the more power you have and the harder it is to have a new company enter into the market, the more likely that the government will get involved to stop it. 4, economics. Apple is, as I mentioned, incredibly profitable. It generates a 20% profit margin. So for every $1,000 it sells, it makes $200. To give you an idea, Walmart, the largest retailer in the world, for every $1,000 Walmart sells, it's lucky if it makes $30. So Apple makes almost 7 times as much money as Walmart for the same amount of sales. That gives you an idea of how much power they have, because Walmart is massive, and that's all that they can make. So the economics are extremely favorable for Apple. Federal Reserve. The Federal Reserve took interest rates to 0 as a result of having this policy for the past 8 or 9 years. Apple has been bid up. because as money doesn't have any interest on it, it goes into riskier assets, as well as assets that are generating higher returns than just zero. Apple has been a beneficiary of that. Money. There's been a tremendous amount of money in the system. The Federal Reserve's balance sheet is almost $4 trillion. And as a result of having all this money in the system, there's more money in the economy. That more money in the economy has benefited Apple through additional sales of the Mac as well as their iPhones and iPads. Apple is selling over 200 million devices a year, and the increased money supply has probably contributed to that a little bit, as has credit. The more credit that's freely available, lower interest rates, makes credit more affordable, the more money available in the economy to buy products and services. Interest rates. The interest rates on Apple, this has actually probably hurt them a little bit. They've been making so much money that they don't really have any debt. Apple has a net cash balance of 150 billion. So if interest rates were 2% higher, they would actually make $3 billion a year. But instead, since interest rates are zero, they make nothing. So this is one of the rare examples where interest rates have actually hurt Apple. Labor. Even though Apple does almost $2 million in revenue per employee, they have a pretty reasonable labor cost. You see, because they outsource the production of the phones to companies in Asia, where labor is significantly cheaper than the United States. The iPhones, the Macs, everything you buy isn't made in the United States. What is made in the United States is the software, the systems for Apple services. Those types of things are made here, and probably some of the software might actually be developed in India, which is a lot cheaper than the United States. So they have a huge advantage on labor because they're having other countries produce the phones. Capital. Apple hasn't needed any money in a very long time. And in fact, the company was worth, if you go back to 1997 when Steve Jobs came back, the company was worth less than $4 billion, and today it's worth $900 billion. It's gone up 223 times. A $4,000 to $5,000 investment would almost make you $1 million in just under 21 years. So their capital has been off the charts. U.S. Treasury, this has been a negative for the U.S. Treasury. Apple has been a little too smart for their own good. They figured out a way not to pay taxes to anybody. They actually set themselves up in a way that they didn't even have a country. They were kind of floating around, I guess, in the ocean. But their tax rate is below that of other companies in this country. And that's something that might hurt them in the future if the government were to go after them. Risk reward. This is a company that over the past number of years, when you're up 223 times when the market's only quadrupled, the risk reward obviously was lopsided. Wealth. Apple has created an insane amount of wealth for all of its shareholders, for all of these programmers that develop for their platforms, the amount of wealth from improving the quality of life of people that use their products. It has been an incredible benefit to all of humanity. And this is an example of how we look at companies at Preactive, because understanding these things before we actually go into analyzing the financials and more of the competitor data helps you give an idea of whether or not this is a company that people should own in their portfolios. Thank you so much for listening. We look forward to the next company.